most futures day traders are trading based off of technical analysis or trading off of order flow tools. How can futures traders combine these gamma levels with their technical analysis to get an edge in their trading execution?
Yeah, that's a great question. That's what we also try to answer. And the reason why we build this and we build the TradingView integration is because of this reason. So, technical analysis is a great tool and we use it too, but sometimes can have some limitations, right? It's mostly using historical data. So sometimes you might actually be trading with limited information and you might not understand really why the market is moving so fast, even if there isn't really a news article or a catalyst that is happening, right? And that is why we have created these models, because we can overlay, I always make this comparison, an additional layer of protection to your trading by using gamma levels. So you don't have to change your strategy, but now you are more protected and you really understand what's around you by looking at the option market without needing to really know or buy the option data or access the option data. You can really simply use those reaction zones, as tools for you to actually be better informed of what's happening in the market. And basically, we're gonna show you some example, right? So if we look at this chart, right, this is a chart of NVIDIA. During this time, there was strong momentum in the stock and the stock almost reached $1,000. And then we saw a pullback. So as a technical trader, really, what would you do? Would you go long or would you go short, right? So now we can start overlaying our technical indicators. So we see touchy support, we have our RSI. So this could be a good indication of a potential long trade, right? So a lot of people might have bought NVIDIA at this level. But then obviously that wouldn't have been out really well because the stock went down and the market really dropped. But now what if you knew that there was a lot of protection going on? There was a lot of market participants that were actually protecting themselves on that level, and they bought a lot of put option to protect from losses. So this is why really understanding the option market is very important. And this is where we see, for example, the market positioning, the red bars, obviously large concentration of put activity. And then the next step is, what if you could plot these levels on a chart, right, together with your technical indicator, and suddenly you understand, okay, the market is moving lower. There's a lot of support from the put side at the level that we see before. Like now we can add this data into the chart, and now we have simplified complex data into a very actionable insight there. And if we go to the next level, then, in this example, let's say that we are looking for a potential trade. The put support level could have been, a good entry point. As we said before, typically it becomes a support zone because of how the market mechanics work. So we could have really go long here on this trade, and then we could have used the next level as a potential profit target. But what if you really wanted to stay in the trade? You were bullish on NVIDIA and you wanted to stay on the trade for longer. Like, what could you have done? So then we can go back to the next day and we can then add our indicators and add our levels that updates on a daily basis. And now we see that now we have a couple of profit targets here, which is the core resistance and the 1-day max levels. So you're targeting kind of those reaction zones over there. So as we see, the price moves higher, touches those levels. So now what do you do, right? Do you stay in the trade or do you sell? Do you go out? Like, what would you do in that case? Well, so again, let's go back to our statistics. We know that on 90% of the cases, the price of NVIDIA in this case closes below the 1-day maximum level, right? So would you still stay in the trade or would you get out? Or would you maybe open an opposite trade? So look for a reversal trade. And as we can see, like the price touches this level and then breaks below and continues kind of like a shorter downtrend. So, this is a very good example on, hey, I'm a technical trader, but I'm overlaying, an additional layer of protection that can give me good insights on when to get out or when to potentially take an opposite trade.